All right, everybody, that is my cue that we are live. So glad to be back with all of you. And if we could, there we go. Now we can see everything and everybody. So oh, look at that. Chris is on it. Gold start for Chris. Doesn't mean that you get away with not doing your homework, but appreciate that. He anticipated the question. So speaking of that, well, let's get started here while a few of the other people chime in here. We are in day 4 of our challenge. And so everybody was given a homework assignment last night, and it's to go and, well, talk about the reasons why you thought that something in particular was a deal. So we'll be chatting about that in a moment here. But for those that have forgotten or those that are coming here for the first time, we are in the middle of a 5-day challenge. We're at the tail end of a 5-day challenge, day 4. And what we're going to be looking at today is we're going to be talking about how to go out and search for development land or conversions. So we're going to kind of talk about a little bit about both of those. As we mentioned the other day, while you're out looking for existing facilities, which most of you that are getting into the business for the first time, you're going to be looking for an existing facility, because that's the quickest way to get into the business, and it's easier to get financed because you have an existing income stream, and that is what the lenders are looking for. So while you were out, I should say, and while you were out in those markets looking at and for existing facilities, head on a swivel. Be looking at buildings that can be converted to self-storage. Be looking at land that may qualify for developing a self-storage facility. And then for those of you that are sure that that's the route you want to take, then obviously you're going to be going through and doing the same types of activities that you're going to do to generate an existing facility, and you're going to generate leads for a development or a conversion project. So that's what we're going to be looking at today. All right, so 5 days, 5 challenges. You're going to complete your homework assignments or action items, and you're going to submit those to us, to Kurt. And at the end of 5 days, as long as we have seen that you have completed all 5 of your assignments satisfactorily, then we will pick 2 winners, and you get your choice of 12 months of the self-storage starter, and that is $97 a month. You can go to our Live Academy, which is normally $997 as a combo, and then you can get a home study system for $1997, a value of $1,997. And so the 2 of you who do all your homework will be chosen to get your pick to win, and you will get your pick of one of those. All right, so we're going to be talking a little bit more about the self-storage starter today as well, because many of the folks had questions with regards to the homework assignments. And so we'll talk about that a little later on today as well. And Jimmy Scott in Denver is on. Glad to see you, Jimmy. All right, shout out to Jimmy. Anybody else? Don't forget, we have a chat. Open up the chat if you're new to Zoom. If you go down to the bottom, there is the icon there that looks like a quotation. And that is where you will ask your questions and or comments. Kurt, our Director of Education, is going to be in there monitoring the chat. I'll take a peek from time to time. I'll come up and take a breath and visit the chat. And then we'll talk through your homework assignment, both yesterday as well as for tomorrow. All right, so with that, let's see here. Any other housekeeping items? I don't believe at this moment. Okay, so, and there's your homework assignment for tonight. Oh, I love it. I love it. It's going to be great. All right, so let's do this. While we're waiting for other folks to come on, let's touch on your homework assignments. And we're not going to go around and ask everybody to raise your hand if you've done it. But tell me what happened in your homework assignments. How successful were you? What challenges or questions came up as a result of that? And we'll answer a couple of those before we head into today's teaching portion of our challenge. Hello, Mary from Wisconsin. Hello, Marty. Oh, man, guys, I don't disappoint me. I hope that means that you did your homework assignments, that you just didn't have any questions in it. It must have been easy, huh? Business plan is due Monday, question mark by Bill. You know what, Bill? You're that student who just keeps asking, when is the last possible moment that I can turn in my homework and it still be counted? Yes, the business plan is due on Monday. Kane reached out to a friend of mine who is a local broker, told him that we are interested in purchasing some self-storage. And he's going to start pulling some reports and cold calling for my business partner and I. Well, that's good. All right. That's a good start. Leverage, and we talked about that. That is what we're supposed to do. We're sending out letters. We're mailers. We're connecting with the brokers. We're getting into the business brokerage side at websites and reaching out to those folks as well. So good. Very nice. Bill says he's not true. He's thinking it through. You want to have a very good and detailed business plan. I get it. Create a letter to go out to the potential sellers. Very good, Paul. Excuse me. Very good, Mary. Anyone else? Anyone else? Okay, we're off to a good start. Nothing happens until we take action. You can't look at a deal and analyze it until you get one on the hook. So making sure that we are doing this. Okay, Chris says, hardest question for me to answer last night was who to be accountable to. I'm a fish swimming against the stream with the people around me. So in the end, accountability will end up being in the self-storage group. Well, Chris, that is, that's a long conversation. That could be a long conversation. The folks that come work with us more intimately, whether it be in a group coaching program or mentor program, they come to work with us for 3 reasons. Typically, one of them is an insurance policy. Don't know what I don't know. I don't want to make a mistake. I don't want to not get started. I don't want to get down the road and be paralyzed by fear because, again, I don't know what I don't know. And analyzing a facility. And so, I've done this before. I've run across facilities, but I didn't know what to do. And so I just kind of left it by the wayside. So they come to us for the knowledge and the experience that we have and that we share. The second piece is accountability, and that's just it. Because many of us as real estate investors, we're not corporate. Some of us may have teams, and some of us are maybe having a team, but it's elsewhere. And we really are only accountable to one. And we have some people that just kind of help us along the way. And we're operating from home, or operating from our truck, Starbucks, whatever that looks like. And we don't have that accountability. And so that's what we provide in our mentor programs as well. So that's not a push for anything other than I get it. I've had coaches, and I have a coach, and it's for accountability. And I have an accountability partner in my business as well. So I've got 2 of them. So nobody's immune, and there's no shame in admitting that as well. Because if you set goals for the year and you don't tell anybody, then what happens if you miss them? Yeah, nobody knew. There's no shame in that. There's nobody to shame you, and that not what a good accountability partner does by the way of shame to motivate you. But you get it. You're accountable once you put it out there to somebody else. You don't want to come back to them, because then it's kind of shameful to say, yeah, I didn't do it. And they ask the reasons why. So I get that. Third reason why people work with us is just because of our Rolodex, our team. They get access to our team, and funding resources, lending resources, and some people that are looking at bigger projects. If they don't have a team and the ability to move on down the road, then it falls out of contract and they don't close. But second most important is accountability. So Chris, I absolutely get that, and we provide that. So let us know if we can help in that department. Kim says, I'm unable to attend yesterday, so I missed the homework assignment. Is it on the Facebook page? If not, what was it? So I'm going to have, how about this? I'm going to have somebody else in the chat describe what the homework assignment was, to make sure that I put it out there clearly. So if somebody would put in the chat for all to see, for Kim to see, that what the homework assignment was. So that'll be somebody else's homework assignment right now. Donna is getting letters out as well as talking to brokers. Number 2, methods are successful and personable. I'm a people person. Number 3, Monday, suffered a fever of 102 since Tuesday. Oh no, it's been a struggle to join, but I am here and want to dive in and do this. No more fear. That's great. 4, a family friend who is retired owned a successful business. Fantastic. All right, you're checking them off, and with a 102 fever, Donna, fantastic. Well done. Hello, Kurt. There we go. Strategies to find undervalued deals, why it's a good deal, when, who, and accountability. So those 2 strategies, of those to find undervalued deals: the why, the when, the who, and accountability. There we go. And Bill came to the rescue as well. Bill actually did better than oh, hold on a second. That's Chris. I was thinking it was Kurt that replied to that. 2 strategies you'll use to find undervalued deals: why you were looking, who will hold you accountable, and when will you start. Very good. Well done, Bill. Marty, what are the 2 strategies you will use to find undervalued deals? When, And who will be your accountability person? Kim says, I'm not seeing the responses. It's going to everybody there. So Kurt, could you make that happen? Kind of cut and paste and make sure that Kim gets it. Kane, introduced to a deal today that is 97% occupied, has 25,000 square foot of climate and 5,000 of drive up. Okay, good. That's what happens when you begin looking, right? And there we go. Kurt just posted it and posted it to Kim. There you go. How do we submit to Kurt? So if you go down in the chat at the very bottom, it says 2. Right now it's going to, mine's default to panelists, and I think most of yours are as well. But you can click on the down arrow and you can submit it directly to Kurt. You can see his name. Asking for 4.25 million. No idea if that's a good deal or not, Kane, because until we get into the underwriting piece and the valuation of it, it could be a great deal. It could not. Looks a little pricey for what it has, right, just on the surface, but that's it. I think those are your settings. Those are my settings, Chris. You're right. Okay. You emailed it to Kurt. Is that okay? Yep. That's good. And there we go. And there's Kurt has sent it out to everyone, to all attendees. There you go. At Kurt at selfstorageinvesting.com. Or you can post it to the Facebook event. There we go. All right, gang. So with that, let's dive in to today's session. Here's what we're going to be chatting about today. So we're going to be talking about, where do we go out and find development deals, development projects? What does that look like? In other words, how do we know what to look for when we're looking for, and where do we look for ground? And so we're going to focus on the places today. So one of them we already mentioned, and that is by going to, or just by looking, we're in the markets that we're already in, and as we're looking at individual facilities, we're going to be looking excuse me, not individual, but existing facilities in a market. I'm getting ahead of myself. Existing facilities in a market, we're going to be looking for buildings that can be converted. We're going to be looking at and for land that can be built upon. It has the broker sign that's a little bit faded. It may have a small building on it. It's 4, 5, 6, 9 acres, and it's just got one small building on it, which can be converted to storage or torn down, and we just move forward with storage in that location. Now, here's a couple other unconventional ways to find land. And one of them is eBay. Conventional way to buy everything. Unconventional when it comes to real estate. So eBay is found at ebay.com. And you put in vacant land and you search in the area in which you are located in, 2-hour drive of where you're located in, and see what comes up. Along those lines, do you know what the next one is then, if we're going to be thinking that unconventional? And that is, yes, Craigslist, believe it or not. And here's why. And by the way, I'd be looking for self-storage or self-storage land or land for sale, because you may get it rezoned. It doesn't have to be self-storage land, but certainly if it's already zoned for self-storage, it's much easier from that standpoint. Same thing with buildings. But the reasons why we like and will always look at eBay and Craigslist is because most people aren't. And there are folks that are selling land that is available, or an old building, or land with a small building on it, because they don't want to pay a broker's fee. And no offense to any brokers that are on the list here, but I mean, that because you contact them as well and let them know that, hey, if you want us to professionally market this and get the right amount of money and properly value it and get it to closing for you, we can handle that, and we charge a fee, but we'll do this for you. But they will tell you that many folks, these are the places. If you don't want to list something, there's places to go, and those are two of the simplest and easiest. And again, if we're working with an unsophisticated seller, that quite honestly is the better seller to work with. They're a little bit easier to work with. They may not be as savvy, and not that we're looking to pull the wool over anybody's eyes, but they're not so overeducated in real estate for them to think that, well, I looked at the 5 facilities, the last 5 facilities that sold in this market, and here's what they sold for, and I looked at the last 5 land sales and it sold for this, and so I'm going to get that, and they quote you the highest price in the market. That's not what we're after. Those aren't the types of folks that we want to work with, but we're looking with the folks that we can just strike up a conversation with and see if we can come to an arrangement and buy their land. Another one is bid, BID, for the number 4 assets. Flip.com. Lots of places on that site where land can be purchased, and people specifically list land for sale at that site. And another one is landflip.com. And many of you, that's one of the larger ones. One of you, or some of you may be familiar with landflip.com, FLIP, just like you were flipping a house. Don't forget to go just to Google and type in land for sale, comma, the city that you look in or the metropolitan statistical area to see what comes up. And that will also produce a list of some of those, but individual listings and then other places and other sites that list land in your market. So what you're looking for is really, no money down, seller financing, no qualifying for lease. Those are some of the search terms and the things that we're after and that we're looking for when it comes to land. And there are many of those companies out there and people that are looking to get rid of land right now because it can't be financed as easily, or they're just in a pinch and they need to. So Land Central is another one of those, landcentral.com. And also, if we're looking for places that are inexpensive and that we can buy on terms or on lease, then there is a site called ownertermsland.com. ownertermsland.com. It's part of the Owner Terms Land Network. And so you guessed it, seller financing on land, ownertermsland.com. Then another strategy is the same strategy as we deployed and talked about the other day to find existing facilities, and that's a mailer. So taking that mailer that we discussed and the ones that are in our home study system and tweaking it and taking out self-storage, your self-storage facility, and edit, select all, replace with land. Same process, contacting the list brokers, printing out that list, doing a mail merge with one of our letters or one that you created, signing those in blue ink, hand stamped, hand addressed envelope is what your hand signed letter goes into, and then mail those out. So whether that's you, your VAs, which are your kids or spouse at home, and yourself, or sending off to another company, that is what is again going to get those letters opened. So exact same process. If you want to go back and listen to that again, then there you have it. Then purchasing, along with that, purchasing the database of folks that own landowners in your market, a couple of different places. So I'll write these down. Actually, I take that back. We will put them in the chat. Kurt can take notes and write these down. So one of those is dataquick.com, dataquick.com. And I also see that Chris said loves bidforassets.com, and it is a great site. So dataquick.com, we're talking about companies that produce mailing lists of folks that own assets, land specifically in the case of what we're talking about today. Another is datatree.com. Next is propertyinfo.com. And they're more of a database of land, period. They do have a database that you can purchase for sending out mailers to the owners as well. Infousa.com is one of the companies that we like. Mailinglist.org, mailinglist.org. And universallists.com. So 2 L's in there, universallists.com. Any one of those will do a decent job of when you contact them, telling them you are looking for a list of owners that own vacant land that is for sale, or land, period, that you will then send your mailers out to. And depending upon how extensive their database is and how much you pay for their database, then they may have the phone numbers of the owners for you as well. Another site that we like really well is taxsalelists.com. taxsalelists.com. Guess what they offer there? Tax sale lists. Very good. Very good. All right. Now, in terms of sending those mailers out, once again, depending upon how wide of a net you're going to cast and how many opportunities there are and available to you once you buy that list, you can send them out yourself or go to click2mail.com, click and the number 2 mail.com, vistaprint.com, which many of you are familiar with. You can hire a virtual assistant to do this as well. and or once again, doing it yourself. Certainly you can do this yourself. All right, so let's talk for a moment then about conversions. Where are you going to find the conversion opportunities? So vacant dark buildings, the big boxes, the old Walmarts, Kmart's, Targets, Venture, Lowe's, Home Depot, Menards, depending upon what location you're in. Any of the large industrial steel buildings that are we would like in a retail area. Any vacant warehouse with low occupancy is what we're also after. So if it's for sale, or we can contact folks, and there's a large amount of square footage that is available, even if there is 1, 2 tenants in it, regardless, but we can put storage into a portion of that warehouse, then obviously that's a fantastic opportunity, because if it already has cash flow and we're just filling up the rest with our own business, that's truly a win-win. You can go to LoopNet and CoStar, and then look under property status, you can search for property auctions, or just distressed properties, any way that you want to put in the keywords for that. Bank-owned REOs, certainly the lower amount per square foot, the ones that are vacant, usually those are the ones that they may be distressed, not always, but there's a good chance that they are. But those are the ones that we're looking for, that we can just move in right away, begin doing our work on, and convert. And obviously contact folks, your brokers, in the retail markets that are selling retail businesses, because they have these big boxes, and industrial, mostly industrial, some office brokers as well. And then even the self-storage brokers, those folks will be, they may have some opportunities that are available in the market as well. So what are we looking for in terms of cost per square foot of land, or cost per square foot of an existing building? Again, that depends. It needs to be competitive in the marketplace. We don't want to overpay per acre. But then we also do not want to purchase anything in the market in which it doesn't pencil out. Once we model this out and look at the revenue, if we can't find anything for sale, or if the revenue isn't high enough, the rental rates for storage isn't high enough, then nothing's going to work. Don't forget that. But when we're looking for, and when I say we, I mean our organization, where we focus on, are in the major metropolitan statistical areas, mostly up and down the eastern seaboard, and outside of the Miamis and the New Yorks, where California, which is obviously West Coast, but the markets in which the prices are crazy high. We're looking for buildings that we can purchase in that roughly $15 to $17 a square foot, plus renovation on top of that, meaning renovation of the shell. So if we're paying 15 to 17 bucks a foot for the building, it may need another $2 to $3 to $4 to $5 per square foot to renovate it. And that could mean just dividing the square foot by a new roof for $1 million bucks, all new HVAC, plumbing, anything else that it's going to turn it into a white box, where we can then come in and build out the walls and doors, or convert it to self-storage, and then add the storage business and everything that goes into that to that building. Typically, we're looking in the $11 to $13 per square foot range in terms of the build out, your conversion to turn it into self-storage, meaning the walls and doors, adding the office, security systems, software, anything else to put the business in. So somewhere in that $11 to $13 a square foot range. We're also looking for, in both markets, a city manager / planning commission that is friendly to self-storage. We want to make sure that they are not, they haven't turned down the last 3 to 5 storage projects that came up in the market. And that only happens by going down to the zoning office and striking up a conversation with them. Is it currently the zone for self-storage? It's even better. And then again, for an existing building, what's the overall condition of the roof, mechanicals? Is there growth in the sub-market? Certainly, we don't want to see a blighted market, a market that is, everybody is leaving, and the median income is plummeting. I looked at a facility once. It was a Walmart. It wasn't a facility. It was a Walmart that went vacant in a certain city in a state nearby, and so the kids love it. When early on in our career, when they say, "Hey guys, how would you like to go out for lunch after church on Sunday?" And of course they were little, so they were, yeah, we'd love to go to church, and we can go to lunches, and we can go to McDonald's, or we can go, anywhere you want. You guys think about where you want to go. I didn't tell them that it was 2.5 hours away in the next state, so that we could look at this vacant Walmart. However, that's what we did, because that's what self-storage junkies do. And don't get me wrong, don't judge. I didn't do this every Sunday with my kids. They're not in therapy or anything, but our kids are part of our business, and we go and make a fun day trip out of going to look at these projects. So I went over and looked at this project, and as the kids were playing around in the parking lot, which is vacant, and they thought it was the greatest thing ever, I looked around this vacant Walmart around the town, and it was kind of down in a bit of a just kind of not a valley necessarily, but from where this parking lot was, I could look around, busy intersection, at all the other businesses around it. And as I looked around, there's a whole lot of big boxes that were dark and vacant. And I thought, man, what is going on here? So long story short, called the broker on the way back. This was listed by a broker in Indiana who contacted me about it. I called a broker in Ohio and said, hey, what gives here? And he said, well, you contacted me obviously because I'm in the storage business. I've looked at that site for a number of years. It had been sitting vacant for a while. He said, at the end of the day, that part of town, that town is not doing so well. It's continued in a downward spiral and decline for years, and it's just becoming blighted. And I don't see anything that they can do to be able to, that it'll rise back up again. So we moved on. So that's just part of due diligence, which we'll get into. But yeah, we definitely want to make sure that the market's going to support it at the end of the day. What are the zoning restrictions? Are there any restrictions against storage, and how you're going to build or convert this building? What are the building requirements? Does it have to have a certain architectural feel to it? Does it have to have a landscape package for $100,000 to $500,000? Can it not go up 2 stories? Can it only be single story? Does it have to fit and finish that matches? That's going to be way too expensive for you to be able to build out in traditional, storage, using traditional storage building materials. Always look for outstanding liens or taxes on it. It should come up in the title work and the title search before you buy it, but you never know. And then if you want to get a quick value, where do we look to find what the value of land is, or just a vacant building? Going to, again, landflip.com to see what is sold, the closed listings. Realtor.com, yes, they have, you have access to historical sales. LoopNet, of course, Trulia, TRULIA.com, look for land for sale. And then again, just Google land for sale and see what is sold, and or any other sites or local sites that can give you a gauge as to what property is selling for in that market. There's a number of publications that you can purchase. The Appraisal Institute has a publication that gives you a way of assessing and or arriving at a value for vacant land. And then, going out and taking a look at the site itself to see what you can find with other pieces of land or vacant buildings that are for sale that you cannot find online, that are listed by owners or other places that just haven't advertised online, to go do your homework. And then while you're at it, you're going to be looking at the things that we need to be looking at and for, just like an existing facility, which is it on a main road with a high traffic count? Is there is it in a residential retail area, or is it tucked back in an industrial part of town, and nobody's going to want to go there to rent a unit? Is it in a high growth market or a stabilized market, or is it in a very declining market? Is there high density housing nearby, apartments, mobile home parks, zero lot lines, really, really small housing communities? What does it look like in terms of population density? Competition, are they next door? Are they 5 miles away? Better location, are they on the main street or off the beaten path? Is this facility, this piece of land, is this conversion opportunity on the main street or off the beaten path? What does it look like from a curb appeal standpoint in terms of your competition? Good, bad, ugly, obsolete unit mix. Are you going to be able to outmarket them and put a product out there that is better on what the market wants, or do they have the premier, and you're going to have a long road to hoe, and you're going to have a tough road to hoe to get this thing up to stabilization? What amenities do they offer? Retail, trucks, climate control, surveillance, business center. What are the rental rates of the competition? Again, just looking at the overall market. And at the end of the day, just wondering if this is really going to work or not once you get to that place. Nothing happens until you get out into the site, go to the site, visit it, and until you determine that it makes sense to do so. And then, of course, you're going to want to get a feasibility study done. So before you move forward with the conversion, before you move forward with a development, once you've found a site that may tick some of those boxes, you're not going to move forward without getting with a consultant and getting a feasibility study done. So one of our resident consultants who was weighing in the past couple of days may come back on here and provide some other input and or ways to get in touch But at the end of the day, you're going to need this anyway before the bank's going to give you financing. You're going to need it before you're raising any private equity as well, and moving forward with any private equity partners that are going to be coming into to this project. All right. So then once we get our feasibility study, we can do some of our own homework, but again, we're going to rely on our consultants to go out into the market and find out for us, what is the supply index? How many square feet of self-storage are already in the market compared to the population, and is there truly a demand for self-storage? And again, the rental rates, and then model out a project to see what this is going to look like. And does it make sense for you to move forward or not? They're going to rate the overall market, rate the overall project, and that is the determination of whether you really should go forward or not. It doesn't mean that you can't because you get an unfavorable feasibility study, although I'd recommend against going against the feasibility study. And besides, the banks are going to be looking at that, and so are your private equity partners. So even if you do go forward, it's going to be a little bit tough. Maybe a little bit tough to get others to come on board, meaning your lenders. So with that, that's at the end of the day, once you have your land, roughly what your costs are going to be to build, because you're getting bids from the general contractors and the builders in the market. And then you're going to begin to then model that out and back that into and match it up against the feasibility study that was done by your consultant, and then take that in front of the bank and either raise the equity with the private equity partners, or you're going to raise that family and friends money, which means the folks that are in your inner circle that are going to assist you in taking down this project and becoming partners in the project along with you as a result of that as well. So with that, gang, we're not going to get too deep into the development process. We're just talking about going through and looking at land and a few of the next steps. So we certainly don't have time for that, but I do want to stop for a second here and entertain some questions. And so first of all, Bill asks, are there any specifications or filters you recommend? Not much different than what we've already talked about. And that is, there's a lot, but the starting point is, until we get to the place where we're really modeling something out, the filters are rental rates. Does it have a decent enough rental rate? And we'd like to see, man, we really need to be over $1 a square foot per year in the market. And if we don't get above that, then it's going to be tough to be able to build if we're not at that place. So definitely like to see that it is higher than that, is more expensive than that. Then we want to see the supply index, and sometimes they go hand in hand because rental rates go with demand. But we need to see rental rates, and we need to see occupancy across the market. So those are some of the filters. And again, as it applies, 6.5, 7.5 square feet per person, that's equilibrium. If we have less than that in the market, then we may be moving forward depending upon the results of our feasibility study and the rest of our numbers. If it's over than that, higher than that, we still may be moving forward depending upon the occupancy and the rental rates of the competition. However, that's usually a good indication of where we're heading is supply index and the rates. And the rest of it is a math equation. How much you're paying for the land, how much does it pay to build it? And then you work backwards and saying, here's how much is the total project is going to cost. Here's how much the revenue minus expenses, the net operating income it'll bring in when it's at 85 to 90% occupancy. And what is the difference between the two? Does it make sense to go forward? So I know that's very simple, not even back of the napkin math. It's Zoom math, but there's lots of iterations and a week's worth of analysis that goes into that once you gather all the data. But the good news is, in this industry, we have a fairly simple, predictable business model. There's a lot of steps to it, and it ain't easy. So don't confuse when I say it's a simple, predictable business model with this is an easy business, because that's not the case. But we know our averages, we know where and how to hit our marks, and it is a math equation as long as you know what you're doing to arrive at the place where, fork in the road. I'm going forward with this or I'm not, and it just didn't work. All right, questions. Give some examples of buildings that are conducive to repurposed to storage. Supermarkets, bowling alleys, banks. Yes, except for the banks. I haven't seen a bank that's been able to be repurposed. It's not to say that it can't be. It's usually not the size that we're looking for. So we are looking for typically, if we had if we had a magic wand that we could wave, about 100,000 square foot building, which means it will net about 80, 85 net rentable square feet inside. So, that's essentially what we're looking for. So it is a grocery store. It's a vacant warehouse, an industrial building, steel building. That makes it easier. Typically, we have zoning in place. It got high ceilings. It's a inexpensive building per square foot when it was built. And typically when they're selling it, it doesn't command a high price either. Office buildings to convert, very expensive. Hotels, apartments, those don't work very well. Schools with concrete walls, really kind of hard to do, to be able to do that. So we like the open expanse, industrial buildings, metal buildings, steel buildings, concrete tilt up that is open, and the fewer the columns, the better. Meaning more recent construction versus the turn of the century, which has a lot of wood or concrete columns. It makes it a little more difficult. We'll do those, and we have done those turn of the century and up to the 1920s and 30s buildings with lots of columns. And sometimes they work. They act as a natural complement to the walls that we're building. But by and large, we'd still rather have some of the other open buildings that were built in the 70s and 80s, the steel buildings. So solid roof, 6,000 pound freight elevator that works, and that has been serviced well and hasn't been taken out of service by the state or deemed as being out of service or unsafe. HVAC, fantastic, great roof, fantastic. The less that we have to put into it up front, the better. So those are some examples of buildings that are conducive to storage. Filters for the mailing. Bill, let's see. Let's back up here again. Oh, filters for the mailer. Well, I answered all that. Here's the thing, Bill. When I'm looking at conversions and or land, I don't, because you may find something that has a small outbuilding on it. Let's see, it could be a storage building. I'm trying to think of something else. It could even be a house, but it's zone commercial and it's on 9 acres right now. You know what? We saw a junkyard that was converted to storage recently. Another one that we like is lumber yards. So like the old 84 lumbers, those buildings are very conducive to storage, and we usually have 8-9 acres. And so we can put boats and RV parking or commercial storage on those. So that is, that's a good way to go. So to answer your question, Bill, in terms of filters, we don't, because there may be a small building that we can tear down. We can get it rezoned. So I'd rather keep this open and cast a little bit wider net when it comes to this, and you can repurpose and get different zoning for these properties. All right. And hi, Graham. How much does a feasibility study tend to cost? First of all, if you're friends and family, we have a discount that we get from some of our folks. We have frequent flyer miles with some of our consultants because we do a lot of studies with them. Desk studies, excuse me, desk studies. I don't want to speak out of turn, but you can expect to spend about $2,000 to $4,000 for a desk study, which means that just that the consultant does not go into the market and do an extensive research on the ground, the site itself, the competition, and walk in and talk to them. They are at their desk and they're gathering, and they got access to a lot of data. And the recommendation is it looks favorable to move forward, but I would recommend a full feasibility study. Or from what I've seen right now, this may not be one to consider, or in the future, growth is coming, but not just yet. They'll kind of guide you as to what the next steps are. Full-blown feasibility study where they're coming out and spending a day or two, full day or two at a site, and then also looking at building materials, using industry averages, meeting the competition, looking at the site, spending a lot more time on modeling it out and giving projections. That's typically in the $7,000 to $10,000 range. So there you go. Can you speak a little about portable storage units? Have you built properties with those added, like using pods or the like? Is it even a feasible idea? So yes, it is, Chris. And yes, we have. It's not always the cost savings that people think, because they're anywhere from $20 to $25 a square foot, sometimes less, depending on which one you go with and the styles, sometimes more. And so, yes, you don't have the concrete work and you just have somebody assemble these versus an actual construction crew that's going to come out and build and develop. But at that cost per square foot, now we're approaching the cost that that is involved in building. And permanent is permanent, which means it is easier to finance a facility that is going to be or is constructed of permanent structures versus mobile, because banks look at mobile, not all the time, but mobile is that. It's mobile, so the income stream can be moved away. So they make you a loan, and so it's like, well, we have no control. You can move those units in the middle of the night to another site and, give up on your loan. And then we're left with a piece of land. This is the bank talking. So we'll look at that in locations where the plus side to the portable units is that no property taxes. You still pay personal property taxes, but no property taxes. They're not assessed because they're not fixtures. They're not improvements to the land. So that is the upside to it. So it does make sense in many instances, but usually for infill. I have not developed a facility completely with portable units. It's one option that we're looking at the site right now, but most likely we won't end up building with these portables. Okay, this is a good one. Yeah, that is a good one. If you're not looking at that, Chris, we could have Kurt share that. It's an example about one building located on a lot of land that he found in LoopNet. So yeah, that's a good one. Sorry, I don't mean to get stuck on that. That's on 11 acres. One building, 11 acres, $300 a square foot, but that's for the building, and $300,000. Oh, it's under contract, but it's a very good example. So Kurt, if you want to share that, that's exactly what I'm talking about. And depending upon where that is, and if there's any, this is zone rural business. If there's any growth coming that way, I would look at that, but it doesn't look like there is. All right. Other questions? Yeah, it's under contract. It wasn't yesterday when I found it. Your competition beat you to it. And you gotta act fast. You gotta act fast. All right, gang. Any other questions? All right, so here's what we're gonna do, gang. Here is your next action item. Your next homework assignment. Begin to gather so that you know to get a benchmark where you're at. And this is going to help you with not only your business plan, but then also as you're looking at facilities as well, you are going to find your credit score. There's a number of ways of doing this. You can go to your lender. You can pay to have it done. There's also services. And if you know what it is, at least last time out, if you've gotten a loan recently, don't pull it again. You don't have to, but roughly what is your credit score. So we're looking at your ability to transact on your own versus bringing in some help along the way. So at least know where you're at so that you know what your limitations are or who you're going to need or want to have come alongside of you to help you get into your first facility. How much available cash, and I mean cash meaning liquid cash to invest, and that does include if you could sell some stocks off right away or some Bitcoin or whatever, but not any long-term assets. So what is your cash that you can invest? And then available credit to invest, and that means do you have any credit lines or do you have the ability to take out a credit line so that you can borrow? Not necessarily, we're not looking necessarily for the actual mortgage itself, but your available credit to invest, meaning to borrow for a down payment. Now, that is a risky venture, and so we're not going to advise that. Again, the numbers have to make sense as we look at our capital stack. But how much money could you borrow if you had to, if a great deal came across, like $300,000 for a 11 acres with a small storage building on it? Then begin to create your list of potential joint venture partners. And now a joint venture partner, depending upon what you bring to the table, this person should also complement that and have something that you don't have. So two broke people with bad credit and no experience in self-storage doesn't make a good partnership and a good team to move forward. If you're going to go out and find a partner, find a rich one who has great credit and experience in self-storage. That's who you're after. But look at a list of potential joint venture partners and somebody that brings something to the table that if you were looking to do a joint venture together would complement, that has experience in an area in which you don't, has cash where you don't, or credit where you don't, or all of the above. Then you're going to go out to a list of potential investors that are people who are going to do just that, invest passively, that have money, your friends and family money, those that would be willing to, if you have a strong project and you're offering some fantastic returns on an asset that they can have a piece of and have some shares in an LLC, and it's a hard asset that they can see, touch, and feel, that also produces income and produces a K1, in other words, depreciation on their tax return, begin creating a list of those folks as well. Okay. Also, one thing that we wanted to mention, so one of the prizes is our Kickstarter program. So this is 12 months. It's a monthly program where we drip out an education to you, and it does have the ability to ask a question here and there, but it's a library of resources on how to find, evaluate, purchase, and managing self-storage facilities. So we have a limited time through the end of this week. So that is today and tomorrow. If you go to selfstorageinvesting.com/starter, selfstorageinvesting.com/starter, that will take you to the page that explains it. And here's your promo code. If this is something that you want to continue this conversation that we're having right now and going on deeper, plus having access to all of our materials, self-storage now. Self-storage now is the code. So that is your coupon code. Self-storage now is your coupon code, and you're going to get 30 days free. You're going to get 1 month free. So go to selfstorageinvesting.com/starter. And the promo code right now to get to 30 days free, 1 month free, is self-storage now. And that is going to show up, if it isn't already, in the chat. I believe Kurt's going to put that in there as well. All right. Oh, all right, Chris. I know you're being technical. It says that we go an hour, but here's what I want to do is I want to leave some time for some questions as well. Okay. Kelly, that's good news. Fantastic. You're going to find lots of partners or lots of banks that are going to be interested. And Chris gave credit score as of 20 minutes ago. Very, very well. Nicely done. Donna says, do you ever put properties under contract with an out clause just in case you do not want to purchase the property, similar to what is done with houses? The answer is 1000%. I have lots of out clauses, weasel clauses that basically, you know what, if I don't like the weather that morning when I get up, I can pull out of any contract that I want, period. Yeah, I got plenty. So, you know, at the end of the day, it's the standard due diligence language, which states that, you know, subject to a review of the books and records and physical inspection of the property, if there's anything I don't like that's not satisfactory, then I get out. Here's the time period. I get to review the books and records. And we usually have 90 days is the process roughly to close a facility, unless everybody's in a hurry. It can be done in 60 or 75, but roughly 90 days. And so they've got, after the time we put a purchase agreement in place and they've accepted it, they usually have 10 days to 2 weeks to give us all their books and records. That way we have 2 weeks to 30 days to review the books and records and provide conduct a physical inspection and perhaps feasibility study, depending upon the project. Once we have all our data and our findings, then, you know, we can go back to the seller within that 30-day period and say, explain this, you know, what gives here, or what does this look like? And, you know, if there's anything out of the ordinary, and if there's something that we don't like and they can't rectify it or won't rectify it, then we're out. If everything's good, then we move forward. If we get to the end and, you know, at the end of due diligence and we still don't like what we see, and they say, you know, are they going to fix it? And they say, no, forget it, we're under contract. And say, well, no, we're not anymore. But conversely, when, if there's things that you see that you don't like and you don't say anything and you go beyond due diligence, then your earnest money is hard. And at that point, if you pull out, then you're going to be sued for breach and you're just going to lose your earnest money. So you need to be prepared and go through that and make sure that you're comfortable with the project after doing your due diligence, because we don't want to be pulling out at that point. Okay. And in the chat right now, Kurt has put the link to our Kickstarter program. All right, gang. Any other questions? Other questions? Any others? All right. Can you repeat the hard earnest money? So if, oh, two people asked. Okay. So when you go into contract for a property, you're going to put 1% of the purchase price down, or 5,000, 10,000, 20,000, whatever that looks like. And that is earnest money that is refundable through the due diligence period. And again, as I mentioned, the due diligence is called the discovery phase, the exploration phase, which means up to this point, you've just been given numbers by the broker or the seller. Now you're going to go through in your due diligence and you're going to verify all of those numbers and have a physical inspection. You're going to have a phase one environmental report, an appraisal. So once you have, the profit and loss statement that they've given you for the past 2-3 years, that shows all the income that came in and all the expenses that went out, so that you get to the net operating income. You want to see what that looks like going backwards, especially for the trailing 12. Once you have that net operating income, the actuals from all the bills, the invoices from utilities, and here's what the property taxes are, and the insurance, and here's what the rental income looks like, and here's all the leases, and here's all the deposits that shows, here's how much it brought in. Once we verify the net operating income, is it different? Is it less than what was given in the offering memorandum? If it's more, great. If it's less, then we have an issue. And if they say, oh, well, we didn't count that, or it went down here, here, or here, then we're going to ask them to adjust the sales price. And if not, then you know what, we're not going to buy it if it's too far off. If there's the inspection shows that there's issues, they got to fix it. And if they're unwilling to do any of this stuff, then we say nope. We're gonna ask for a release from the contract, and we will be let out because that's what the contract states, and we get our earnest money back. If it is set 30 days from the date that you sign the purchase agreement, and they have given you all the books and records, and you've looked at everything, and you're good, you're going forward, you sign off on due diligence, which means that I'm fine with everything I see now. We're going forward to close, and if we don't close, I realize now that I forfeit my earnest money if I pull out of the deal right now. So that's when we want to make sure that our earnest money, by the time it goes hard, that we've done all of our due diligence and looked at everything, dotted all our I's and crossed all our T's at that point. Okay. You're welcome, Victoria. Who do you address the envelope to? Owner's name or just storage owner? Owner's name if you've got it, Marty, or I put owner only or principal only because there's gatekeepers that are reading their mail. Yes, Bill, I have just a couple. Yeah, Chris, I will take a look at that. All right, there we go. You're welcome, King. All right. So with that, gang, you're going to submit. First of all, hold on a second. You don't need to submit your credit score. We just need to know that you went out and got it. So I know some of you shared that, and that's great because it's a great credit score. You don't have to share that. You can just put, I prefer not to, but how much you have available cash to invest, available credit to invest, list of potential JV partners, list of potential investors, because then we're going to break down and talk to you about best ways that you can get into the business and what that looks like. And at the very least, gray it out. We don't necessarily, we're not looking for the information. As I read this, I thought, God, maybe Scott just wants to know what we got and available. If you're not comfortable with that, then that's fine. We're just looking to guide you, and we need to know that you've done it. And more importantly, you need to know where you're at so that you know what path to take. And if you're going to need to bring some folks in, given the ratios that we've looked at and loan to value, what is it going to take for you to be able to get into this business? And if you're shy in these areas, then you're going to need to build a little bit of a team or identify some folks that can come alongside of you or help you with this. Otherwise, when you find a deal, if you are shy on resources in any of those areas, you may not be able to move forward with a project, and we don't ever want to lose out on a project because we were unprepared to buy it. And especially if we've already thought about and known that we are deficient in one of these areas. So then that's shame on you. So we're bringing this to light as your virtual accountability partner to show you what it is that you need to go out and transact. All right, gang. So with that, we're going to wrap it up. Everybody have a fantastic afternoon, evening, and we will see you tomorrow as we wrap up the challenge. So go do your homework, go look for some more properties, and we will see you on the flip side. Have a good night, everyone. Take care.